In this video, traders, we're going to look at common trendline traps. Stay tuned. Hey guys, a very warm welcome to you. Thank you for joining me. Okay, so I have for you, what have I got for you? 4 common trendline traps, and I want to kind of go through some of the things that I think are mistakes when using trend lines. Again, in my opinion, all the videos are, my opinion, my approach to the markets, rightly or wrongly. You either think, yeah, I agree with that guy, some of the things, or I don't, and that's fine. That's the way it works, guys. We're all here to kind of find our own little niche and our own little way of trading things. But in my opinion, I think that, trend lines are overused in certain circumstances. So the first one is drawing a trend line in the middle of nowhere. If you are in the middle of a big range and it's very quiet and you're on a small time frame, nobody cares about the trend line, guys. It's irrelevant. And I see people drawing all these little trend lines on, and it's noise. It's not a real trend. Let's say you've been moving around like this, then all of a sudden you've got this kind of thing, and maybe if that was an intraday chart, but if that's a bigger range, let's say you had a really big range there and this is a kind of really small shallow lunchtime chop or afternoon or something, and you've drawn this little trend line, it's not that important. Maybe you're going to use it as a trigger, but no one else is looking at that. No one really cares about that. A very small few people do. And the whole point of them is that, other people are caring about it. So don't start drawing them in the middle of nowhere. If you're on the daily charts and a higher time frames and it's very clean and very clear and it's obvious that it's on there, then fine. But when you're kind of drilling right down into very small time frames, not to say you can't, but when you're drilling right down, it's in the middle of kind of chop and stuff, then don't bother. Of course, a small time frame, you've got an intraday trend, fine, works absolutely fine there, but this kind of stuff, be careful of it. The second one, guys, is having too few data points. I see people extrapolating out kind of 2 data points over, let's say, 4-month period or something. It's been a higher low, and they use that as a trend line. I mean, listen, I don't think that really makes sense. Some people are going to disagree with me on this because I know some people do this, but if you've got a low here and then several weeks later you've got another low, it's just a higher low. The fact that you think you can extrapolate out that trend, to me, doesn't make any sense logically. It's like, why would the price stop there at that specific point? I don't see any reason for it. To me, makes more sense to kind of frame and do a zone of support here rather than that. And also, if you've only got 2 data points, one slight little movement, if you're going on the body of the candle, you're going on the close, you're going on the end, that changes that angle massively. We know by the laws of kind of numbers of the angles, where if you're just changing it slightly, it's going to change things massively at this end. So when you're coming further down the line, you're thinking about a trend here, it could actually be here, which is, 2% lower or something if it's a stock you're trading. So I don't think that's a great way of doing it. I think it's a trap that some people fall into. Then I was thinking a trend line rules everything. A trend line is good, and it's good for framing a trade, and it makes sense, and I understand it, and I like using them myself under certain conditions, but I think you've got to look at them as secondary. If this is a massive level of resistance here, and yes, there's a trend line coming up to it, that probably is going to trump everything other than the trend line. Yes, the trend line might offer a break. Yes, there might be opportunities there. Agreed. But sometimes there's a big level that's far more important that everyone's got, because trend lines, don't forget, it's subjective. Not everyone has a trend line on. Everyone has a 52-week high on. Everyone has a Friday's high on. Everyone has a gap fill. Everyone has some kind of finite level on their chart. And also, don't forget, guys, as well, didn't add this one, if there's like a catalyst. So if you've got a catalyst to the trade, that's going to trump everything. The trend line doesn't matter. There could be an uptrend. If there's some sort of economic catalyst that sends it down that way, it's game over. The trend's just not irrelevant. So just being mindful that the trend line doesn't rule everything. It's a handy little guide, handy little way of framing the trade, but I think it's kind of secondary really when you look at some of the other inputs that are there. Final thing is using the first break as a trigger. I think a lot of people jump and chase on this when in reality it's still a downtrend. You've got to remember that, yes, it's bullish that it's broken that trend in this kind of example, and it's good, but don't forget, all you've done here is just taken out that high, right? You've got to kind of still look at it at the frame of the whole market rather than the trend. Yes, that's bullish, but jumping on that straight away, like here, isn't really conducive to kind of feeling what the market's doing, because you haven't even broken that high yet there. And even here, you're kind of chasing. But don't forget, the weight is still pressured to the downside. So there's very likely going to be some kind of pullback. Maybe you get a pullback to the trend line as deep as that. Maybe you don't. But I think that jumping on that first kind of impulse is a mistake, in my opinion. Some guys may have a really good strategy for that, and that's fine. If that works, that's good. But I think jumping on that, it can be dangerous, because you're kind of chasing stuff. You're still ultimately in the downtrend. You're not kind of buying an exhaustion. They're giving you that edge. You're kind of chasing after a pullback. It's normally the place, in my experience, guys, where markets rotate down for another test. Maybe they'll put in a higher low. Maybe they'll retest before they carry on, as opposed to just that V-shaped reversal, which is really what you're looking for here. You're looking for that reversal. Now, of course, if you're happy to sit through a lot of heat, you're happy to put your stop under here, you're happy to sit through and all this, then that's fine. That makes absolutely perfect sense, and there's no reason not to do that. However, I think to try and tweak the entry and get the sweet spot, better to wait after the first break, some sort of pullback, maybe we climb back to the trend line, or some kind of pause, something like that. Anyway, guys, those are 4 common trend line traps that I think I see out there. Let me know your thoughts on these in the comment section below. Take care, keep your risk managed, and I'll see you in the next video. Bye-bye.